Dear students, welcome to the lecture series on financial management. Today in this lecture, we shall cover the topic tools of financial planning. Under tools of financial planning, we have discussed various tools in our previous lectures, and today we shall continue the practical question on the cash budgets. In our previous lectures, we have learned how to find out the cash collected from debtors using the format as well as the debtors ledger account. So, continuing the cash budgets question, we shall learn the computation of entire information and to find out whether there is deficit or surplus of cash. The objective of this lecture is to have an understanding of the method of computation of the cash budgets for the budgeted period and for the budgeted activities, so that an analysis of the position of cash for the budgeted activities can be ascertained. So, let us start with the question and solve it. Now, the following relevant information is also given in relation to the budgeted as well as the actual figures for the cash budget being given. The first one is the sales. Regarding sales, it is said that 20% of the sales are for cash. That means if the sales for the month of April is 90,000, our cash sales will constitute as 20% of 90,000 is equal to 18,000. So, remaining shall be the credit sales. It will amount to 72,000. We will learn these figures while solving the question. So, now let us see the credit period allowed, that is collection period. Here the collection period for the credit sales shall be half month, meaning thereby whatever has been the credit sales in a particular month, half of it will be recovered in cash in that particular month only, while the remaining half shall be recovered in the next month. If for example, our sales given is 90,000, we will subtract cash sales of 18,000, we shall get the credit sales of 72,000. So, half of 72,000, that is 36,000 shall be recovered in the month of April itself, and the remaining 36,000 shall move ahead, that is in the month of May. Now, for the purchases, the following relevant information is given. 10% of the purchases are for cash. That means the cash purchases figure will be just 10% of the purchases. So, we can see our budgeted figure of purchases, that is 50,000, 45,000 and 35,000. So, 5,000, 4,500 and 3,500 will be the cash purchases, and the remaining, that is 45,000, 40,500 and likewise will be the credit purchases, and they will be recovered or they will be paid off as per the credit period allowed to us. The credit period allowed is 1 month. That means the April's credit purchases shall be paid in the month of May, May's credit purchases shall be paid in the month of June, and March credit purchases, that is 42,000 minus 10% of the 42,000, that is 4,200. So, remaining 37,800 paid in the month of April. So, these were relevant information regarding sales and purchases. Now, let us analyze the information for wages and expenses. Expenses as the last column is being given as they are being paid regularly, that is 7,000 is paid in the month of April as per the budgeted information, 6,000 will be paid in the month of May and the 5,000 will be paid in the month of June. And if there is bifurcation of these expenses, that is particular expenses for rent or for any other electrical expenses, we can bifurcate that expenses while preparing the cash budget as per the information given to us. Since our question does not say any particular bifurcation of these expenses, we shall take it as such. Now, wages. Wages are being paid half monthly, that is out of 24,000, 12,000 shall be paid for month of April, and 22,000 which is the wages for March month, 11,000 of it shall be paid in the month of April, and 12,000 of the April itself will be paid in the month of April. So, 11,000 plus 12,000 we need to pay in the month of April. Similarly, remaining 12,000 plus 10,000 of the month of May will be paid in the month of May. Again, the remaining 10,000 of May plus 9,000 of the June shall be paid in the month of June. So, we have all the information. So, we can start preparing the cash budgets. One more important information is given as opening balance of cash. it is rupees 15,000. Having known all the information, now we will first of all prepare the schedules for the collection of the debtors as well as the payment of wages. Now we have to find out the collection of the cash from debtors. So we are preparing this statement where we have to find out the sales for the April, May and June. The March figure is relevant because the collection period is half month. So first of all, let us see the credit sales. For the month of March, the credit sales is 80% of the 75,000. So it's constituted 60,000. For the month of April, that is for 90,000, the credit sale shall come out to be 72,000. And again for the month of May, that is 85,000, it shall come as 68,000 because it is 80% of 85,000. Now for the month of June, it is 80,000. So 80% of 80,000 shall constitute 64,000. So this was the information relevant for getting the cash collected from the debtors. Now let's see the collection. It shall be half of the March shall be received in the month of April. So it will be 30,000 and 36,000 of the April will be collected in the month of April itself, while the remaining 36 will be collected in the month of May. So the March 30,000 would have been in the month of March only, and remaining 30,000 will be in the month of April. So together they are giving us a figure of 66,000, which is collection from debtors for the month of April. So half of the 68,000, that is 34,000, shall be received in the month of May only, and remaining half will be in the month of June. So it will give us the figure as 70,000. 70,000 will be the cash collection from the May. Now the half of 64,000 will be received in the month of June, and the half of the 64,000 will be collected in the month of July, which is not relevant for us because we are computing the budgeted period of 3 months. So the figures for April, May and June are relevant. We have taken March into consideration because half of the March amount is coming in the month of April. So we have used this figure. So here the total of the June shall be 66,000. So we have computed the collection from the debtors as 66,000, 70,000 and 66,000. So this is the way our collection figure of debtors has come. We have the opening balance. So we will find out the total receipts. Now we have to find out the figures for cash purchases and the credit purchases because we have to ascertain when the payment is to be paid in relation to the credit purchases. In our question, it is given that the credit period allowed to us is 1 month. So the payment for the purchases which is made in credit shall be paid in the next month. For the March, the payment shall be made in April. For April, it shall be made in the month of May, and for May, it shall be made in the month of June. So we have to find out the relevant figures of March, April, May for the credit period and the cash purchases for April, May and June. So we are using these figures as total purchases of 42,000 is given for the month of March. So the 10% of it will be the cash purchases, and the remaining one, that is 37,800, shall be the credit purchases. So payment shall be made, payment for accounts payable will be in the month of April. It is 37,800. Similarly, for the month of April, we have the figure of purchases as 50,000. this one. So the cash purchases will be 5,000. Credit purchases shall be the 45,000. This 45,000 shall be paid in the month of May. Now for the month of May, we have the figure of purchases as 45,000. So 4,500 shall be the cash purchases and 40,500 will be the credit purchases, which shall be paid off in the month of June. So cash purchases plus the payments made shall be the figure of the payments the month of, and we have to find out the cash purchases for June also, that is 3,500. So it will be, these are the figures for the total payment regarding the purchases which we need to make in the cash budgets. Now another payment which will be made is for the expenses. It will be 7,000, 6,000 and 5,000 in their respective months, that is for April, May and June. Now another important calculation which we need to make is for the wages. So let's learn this with the help of a statement. Now we have the computation sheet for the computation of the wages to be paid. That is the amount of the cash which we need to pay for the payment of the wages. So our question says that our wage payment period is half month. Half month means that 50% of the wages expenses are to be paid in the month in which they are incurred, and remaining 50% shall be paid in the next month. So here the 50% of the current month for the month of April will be 12,000, for the month of May will be 10,000 and for the month of June will be 9,000. Last month's 50% will be 22,000, that is the wages for the month of March shall be 11,000. Here it's 50%, 24,000, 50% is being paid off. So remaining 50%, that is 12,000 will be paid in the month of May. So this 12 and this 12, that is 24,000 is being paid off. And similarly in the month of March, 11,000 had already been paid off and 11,000 is being paid in the month of April. Since it is not relevant for us, this figure is not relevant for us because we are computing the budget for the month of April, May and June. So 11,000, 12,000, and now that out of 20,000, 10,000 has been paid in the month of May. So remaining 10,000 shall be paid in the next month. So they will give us the figure of the wages being paid. They are 23,000, 22,000 and 19,000. Now we have all the figures, that is cash purchases, accounts payable, expenses paid off and the computation of wages. So we can find out the expenses detail. Similarly, we have all the figures, that is cash sales, opening balance of the cash accounts, then payments collected from the debtors, cash collection from the debtors. So we can find out the total receipts. When we have total receipts and total payments, we can find out the surplus or deficit and can compute our cash in hand. Now students, we will learn another aspect of the tools of financial planning, that is called the projected financial statement. In our previous lecture, we have learned in detail about the projected balance sheet, what are the asset sides and what are the liability sides, how it is being prepared. So today we will discuss the practical aspect of computing the projected balance sheet, because when we prepare the projected balance sheet, we have to find out the projected income statement. Projected income statement is nothing but the P&L account. So it will tell us the profitability as well as profitability position, because it will take into account all the expenses relevant to the production and the operations, and the net result, that is the receipt minus the expenses, will be taken care of. But only those receipts and expenditure which are of revenue in nature shall be the part of the income statements, while those assets or the liabilities, that is all expenses and the receipts which are forming the part of capital nature or which are of capital in nature, will be in the balance sheet. For example, capital expenditure incurred for acquisition of a machinery shall be constituted as an asset and it shall form the part of the asset side of the balance sheet. So, this is the main criteria of the distinguishing between any item of expenditure among the income statement, that is in the P&L or balance sheet, is its nature, whether it is of revenue nature or of capital nature will define the fate of the expense to be classified under income statement or the balance sheet. So, we are taking up a practical question to compute the income statement under this lecture. Now, students, let us see the projected income statement. It is prepared for a particular period. It is not prepared for the point of time, but for the period, that is for the entire year. So, it will be prepared for the period ending 31st March 2011. So, first of all we will take sales. Let the sales be rupees 10 lakh less cost of goods sold. Let it be 7 lakhs. So, our gross profit will be sales minus cost of goods sold, 3 lakh. Now, we have to ascertain the expenses to be deducted from the gross profit. So, up to sales, cost of goods sold and GP, it shall be considered as the part of trading account. Now, we will subtract expenses, less expenditure. It will be rents 30,000, salaries 50,000 and office expenses 20,000. So, together they are giving us a figure of 1 lakh. So, our net profit will be 2 lakhs. This is profit before tax and interest. Now, we need to subtract interest. Let it be 50,000. So, our profit before tax but after interest is 1,50,000. Now, we have profit before tax figure as 1,50,000. We will subtract tax. Let the tax rate be 50%. It is 75,000. So, our profit after tax will be 75,000. So, this is the way we compute the income statement for a period ending. It will give us the position of the profits, that is profit before tax, then deducting the interest element out of it and getting the profit after tax. So, with this projected statement we can ascertain how much profitable the venture is. If we take up any activity or any project, the sales coming out of it, these all are the projected figures which we have computed taking into account all the considerations of a project. So, with this we have learned the preparation of income statements. Now, we are summing up our lecture of today. Today we have learned the method of computation of the cash budgets, where we have identified the period of the credit being allowed and the period of the credit being given to the debtors, so that we can ascertain the availability of the cash, that is collection of the cash is to be ascertained using a statement, then payment of the cash to the purchase for the purchases or towards the suppliers is to be ascertained, then what is the mode of the payment of the expenses that we have taken into account, and then we have find out the cash balance as on a particular month available with us, and then we have computed all those informations in a specific format called cash budget for the budgeted period. And we have also learned to compute the projected income statements, where we have taken into account all the relevant sales, cost and expenditure being incurred for a particular project and traced out the profits available out of that project using the projected income statements. Thank you.